Welcome to Worth a Listen, a financial podcast for your everyday life. My name is Chris Haney, and joining us today is Miss Amber Speer, Vice President of Mortgage Service for Texel Home Loans. How you doing today, Amber?
I'm doing well. Thanks, Chris.
You're welcome. Amber's here today to help demystify the home buying process. You know, Amber, when I think about buying a home, a lot of times it's pretty scary. I bought a home 5 years ago, and I had no clue what I was doing.
Sure.
Some good friends and family members did help us along. But for our listeners out there, talk to us a little bit about that home buying process. Why is it so scary?
I think it's scary just because you've never done it before. And I think that it's okay to be scared of what you haven't done before. And so the way that you overcome that is to learn more about the process, get familiarized with it, so that way you can overcome it.
Well, how do I even know where to start? I mean, what do I need to do to prepare? What things should I do as a person to prepare myself for buying my first home?
Yeah. The first thing that I would say is focus in on your credit score. That is one of the biggest qualifying metrics that we use. For example, do you even know what your credit score is?
Well, I know my credit score, but if I don't,
But if you
where do I go to
don't,
find it?
where do you go to find it? There's a lot of online tools that are free. For example, you could go and get a copy of your credit report with freeannualcreditreport.com, or you could partner with a credit union like Texel, where we actually provide online tools where you can get that information.
Okay.
So that's a good starting point. And the reason why that also matters is, in addition, for qualification purposes, we are looking for a score around 620 or higher, but this also prices your interest rate. So the higher your credit score, the lower the interest rate. So you want to know that, so that way you understand, where you're falling in line. So once you have that and you have a good understanding of what your credit score is, you really need to double down on your budget, okay? Because buying a home, that monthly payment, you need to have a good understanding of, how much a month do I have coming in and how much do I feel comfortable in order to spend on a home. And if you don't have a solid budget, you shouldn't jump into a mortgage.
Well, when you talk about budgets and credit scores, these are high level topics that some of us may not really understand. So, when it comes to budgeting, what type of budget should an early homeowner look for? How do they save, and what type of money are they looking to budget for to buy a house?
Yeah. Well, if we're talking about when it comes to how much we should maybe allocate of our budget for a housing expense, a good rule of thumb might be 20 to 30% of your monthly income coming in should be allocated. Now, of course, this is personal preference. If you lean on a conservative side, maybe 20% is where you fall in, but you need to really assess that and see what you're feeling comfortable with. But outside of just saving and starting to save for your down payment and also closing costs, it all matters. And so I would recommend setting up some type of reoccurring automatic transfer from your checking account into a savings account. That way you don't even have to think about it, and you have money just slowly starting to automatically get deposited and start accruing interest for you.
Well, when you say you save money too for that down payment, I think you threw out a number of 20% sometimes, and that's 20% of how much the home is worth you want to put down before purchasing?
That is a common misconception.
Okay, because the way I think about it is I'm looking at home prices in our area, and sometimes it's pretty high.
Yeah.
Some of those new builds get up into the $400,000-$500,000, and if I'm thinking 20% down on something like that,
Oh, yeah.
that's a number.
Well, yeah, for sure. That is a misconception. You don't need 20% to buy a home.
Okay.
There's a lot of first-time home buyer programs out there where you can put down as little as 3%. If you happen to be a veteran, you might actually qualify for a VA loan where you don't have to put anything down. Now, what you need to be aware of is, if you don't put 20% down and you don't have a proper program, something called private mortgage insurance would be placed on your loan, and that does impact your loan payment. So you just want to be conscious of that. But the benefits that you need to be aware of is you don't need 20% in order to buy a home.
What would you say, I guess, what would be the minimum minimum amount to put down? So like, I want to go buy a home. I'm looking at normal prices
Mhm.
on homes, maybe not something brand new, but
Yeah.
what about how much money do you think that I would need to put down on a home?
About 3% if you're a first time home buyer. And
Okay.
so in the state of Texas, the average home price right now is in the middle 300,000s.
Okay, so I just did quick math on
Yeah.
the computer here, and so somewhere around $10,000 to get into an average home here in Central
Yep.
Texas is probably that mark you're looking for.
Right.
Okay, so saving $10,000 doesn't seem so daunting when you think about it. Okay, so I've saved my money, Amber. I'm ready to
Huzzah!
go. Hooray! What's my next step? What do I do? I drive down the road, I see signs, but what do I do?
Okay. Well, first off, it's more than just saving for a down payment.
Okay.
When you are getting into a mortgage loan, there's actually two things that you need to account for. You have your down payment that we just talked about, but there's also closing costs associated to your loan. And these things combined are commonly what we say is that's required cash to close. So we have our down payment, then from there, our closing cost. That is generally about 3% of your loan amount. So once you have that saved up, the next thing that I just want to just talk about before we just even jump into the loan is you want to make sure that you have money still set aside for emergencies and things that you need to account for because homeownership means that if something breaks, you have to repair it.
You,
And we want to make sure that you're set up for success and you feel comfortable jumping into that. But once you have that and you're ready and you have things saved, you'd want to go ahead and then start looking at doing a pre approval. Because the thing that actually happens a lot, Chris, is people will see maybe a home on the road and they're like, ooh, yeah, I want to buy that. And they haven't been pre approved yet. And so the idea is you want to make sure you have your steps in line and you come to the credit union, get a pre approval, know what your buying power is. So that way, when you're shopping, you're looking within your price range. And that way, you'll have a happier home search.
so your suggestion is to go for that pre-approval first because
Yeah,
that will tell you or the buyer how much they're able to buy.
right.
Okay, so instead of saying, "Hey, I can get a $600,000 house,"
Don't know.
we can probably get you pre-approved somewhere in a $400,000 home. Keeps folks from being what house poor is what they say when you
Yes.
purchase a house over the amount that you can afford, and now all you can do is the house.
Correct. And the other reason why you want to be pre approved before you go shopping is obviously you'll be able to identify your buying power. But then again, we go back to the very beginning. You want to know what your budget is. You want to be able to align your buying power with that budget that you established at the beginning because you want to have confidence. Because we just talked about you had fear at the
Mm-hmm.
beginning of this transaction where you haven't ever done this before and you don't know what to expect. So, the way, again, that you combat that fear that you might have for purchasing a home is I set my budget, I have my pre approval, I'm aligning that buying power with my budget. I am further reiterating that confidence of giving myself of I can actually buy this home.
Wow. Okay. No, I completely get that and it makes a lot of sense
Yep.
too.
Yep.
But now that I have my pre-approval and I know how much money, so I just go on like hard.com and pick my house next.
Sure. Yeah. Um, actually, I think I read a study where it's something like 95% of people are online searching for homes. So yeah, that would be common, but I do recommend that you work with a local realtor. And the reason why I suggest that is the realtor, they know the community. And so they're going to sit down with you. They're going to ask you what your buying power is through that pre-approval letter that you got. And then they're going to ask you questions like, what are your non-negotiables? Things like how many bedrooms, how many bathrooms? Maybe they've identified like a certain school zone that you want to be in. So once they understand, what are your must-haves, they'll help find you homes. And then from there, they'll help you negotiate. And that's very powerful. In the market that we're in right now, housing inventory has started to rise. And when I just looked at information from Market Stats, Bell County was actually on the high end of about 5 months worth of inventory. And what that means is if we just completely stopped building homes and only use the inventory that we had, it would take about 5 months for that to be exhausted. And in an environment, you want to have a neutral environment for sales. And so 5 to 6 months is a good neutral environment to where we're not having a situation where it's not a seller's market. Buyers have the opportunity to help negotiate and get things like selling concessions. So your realtor will help negotiate that with you. They could possibly lower the price of the home or maybe negotiate some better selling concessions for you.
Okay. No, and that's so in my own personal experience when I was purchasing my home, one of the things our realtor did suggest was a negotiation piece.
Yep.
And it was actually around the AC unit. So
Ah,
they converted our garage into like a study room. So it's
okay.
a converted garage. But when they did that, they didn't take into account the new square feet of the entire home.
Mhm.
And so the AC was not rated for that square footage. And the seller wanted to sell to us with, the smaller AC. And so we ended up getting quite a bit of money off of the home price. And that was the leverage, I guess, that they used to get us a lower price so that we could use some of the collateral we had saved up to purchase that new AC. By
Perfect.
the way, that AC is great. I love it.
Oh, that's awesome. Well,
It's great.
that's awesome.
Okay, so after negotiating or after getting with a realtor and getting those must-haves, what happens if I don't find all my must-haves? Do I need to have all my must-haves?
Well, I think it's important that you do understand that if you're new to buying a home, you might not get everything that you want. And so that's why it's important to have your must-haves and your wants list and understand that maybe that isn't the mansion down the road that you have your heart set on. But the opportunity is to still have home ownership and to create that stability in one of the biggest budget expenses that you have, which is housing. And with that being said, you might have the opportunity down the road, years later, where maybe your income has increased, where you might be able to afford that mansion or larger home.
Well, I see all these home builders saying custom home, build your own home on your lot.
Yeah.
Well, why can't I just, if I don't find my must-haves through a realtor, why can't I just go build?
Well, as a first time home buyer, nothing says that you necessarily can't build a home. That could definitely be an option, but partnering with a local builder where they have actually already built a new home is actually a really good option, especially in our local community. They have really good builder concessions to where you can get packages. For example, a lot of them are offering like fridges come in the deal, or they'll do things like garage door openers. And they're offering builder concessions that you can, apply to the purchase.
I
Now, if you're
guess that,
building custom, that
hmm
gets a little
I
expensive
see.
and more funds to close.
So I guess if you were giving like a suggestion to new home buyers, stick with the pre-builds.
Yeah,
Okay.
yeah.
Okay. You get probably better deals, better bang for your buck, if you will.
I will say no matter what on your custom builds, generally the highest that they'll go on loan to value is 80%. So you would for sure
Okay.
have more down payment.
Much more down
Yeah,
payment on that. Okay.
yeah.
So I've got my pre-approval. I've picked out those homes, a couple that I'm looking at. Talk to me about the walkthrough process. Like, what am I looking for when I go into the house? Am I looking for quality? Where am I where should I lend my hat? Where should I put myself?
Well, I would have to say that when you have found a home that is within your buying power and it's checking all your boxes and you're ready to go ahead and put in an offer, what you're going to want to do is get an inspection. And this is a third party individual that has expertise, and they'll be able to review your home and give you valuable feedback because an average person, an average first time home buyer, we're not experts in everything in home. So that's the benefit of the inspection. You have someone who knows what to expect and they can give you valuable feedback. So that way, you know if this is a reasonable and good investment for you to do. An inspection is something that will cover like the roof, they'll look at electrical, they'll look at the AC, and they'll be able to give you some feedback on that.
They will. Okay. And what do you do with that inspection? What happens if something comes back? Like I used my example, the AC.
Yeah.
And the inspections told us that your AC unit is rated too low for the square footage in the home. Our
Mhm.
suggestion is replacement. So those are the kind of things that an inspector will
Mhm.
will tell you. What do you do with that information then?
Your realtor will help you negotiate on what you want to do. First, you can choose to know that this is something that is occurring with the home, and you can choose to accept it, or you can choose to negotiate and maybe get some type of discount, or you can negotiate it being fixed. So
Okay.
the options with the realtor there for
So
you.
the homeowner can actually fix some of the things wrong with the house
Correct.
before they sell or before you close, I guess what the
Exactly.
word is. Okay. So when I make an offer,
Yeah.
am I making that? Do I tell do I call the homeowner up and say, "Hey, I want to buy your house for this?" Because
I
that's what I see
promise
on
to buy your
TikTok
home.
all the time. I see people on TikTok, talking about they call homeowners and like, "Hey, I'll buy your home for cash." And it's always a weird conversation. I don't know if you see those on TikTok, but you know, am I making that offer?
No. And yet another reason why you want to work with a realtor. A realtor will help write up a contract for you, and they will then extend that offer to the seller and they will help execute the contract. So that's the benefit of, again, working with the realtor. They'll help negotiate that and get the contract. And then they'll help get things what's called an earnest money deposit. And so whenever you execute a contract, one of the things that you're looking to do is show the seller your good faith that you are going to follow through on buying the home. And earnest money does that. It earnestly shows that you want to buy the home. And that could be anything from like 1,000 to 2,500. And that money that you put down is shared and given to a title company where they hold it, and that will also be applied for your closing costs. But that's showing your goodwill, your good faith that you're going to be buying the home.
So when I make that offer, I also put a little bit of money. I'm like, "Hey, a little carrot. I
Yep.
want to buy this house.
You
Do you accept?"
earnestly, you
Okay.
earnestly want to buy it.
And so is that it? Is that it for me as far as the process goes? What
Yeah.
happens once you know, do they always accept?
Oh, well, okay. Well, first off, contract. So, yay, you found a home, you got the contracts executed. Awesome. But I guess, okay, well, Chris, if we're talking about the fact that a contract has been delivered, does the seller always accept? No,
Okay. Do I
no.
get my money back?
Yeah, yeah. Money wouldn't have been exchanged with them at that point.
Okay.
But yes, so if a contract and the seller has accepted it, and you do go under contract, that's when the good news is. So like
Okay.
we're under contract, and funds are exchanged for the earnest money. But when you do go under contract, that's when the lender steps in a little bit more. And that's where we start to get the process in hand to start moving this home and putting it in your name. And in order to do that, there's a little bit of a process that goes on. You start to sign documents. There's things like an initial disclosure that gets sent to you. We also start ordering things. That would be something that's called like an appraisal. An appraisal is something that is required from a lender. And that's for us. We're trying to determine the value of the home to make sure it's sufficient for the loan that you're trying to get. Um, from there, we also do things like we're ordering title commitments because, again, we're trying to prepare to get this home put into your name. That period when you're in contract takes about 30 days. It can go quicker. During that time frame, the buyer and the seller, they also need to start preparing. They've got to start boxing up things in their homes. They've got to start planning ahead for the move. And so while that's going on, they need to start planning ahead for that.
Okay. So I know that a lot of times, and even Texel, we offer different mortgage type products.
Yep.
But even online, there's so many different acronyms for types of mortgage loans, like VA loan or there's a USD, FHA, USDA,
LMNOPA.
Jumbo. There's all these acronyms. So how do I know what loan is the best type of loan for me?
Yeah. So as a lender, it is our job to educate borrowers on the various loan programs that they could qualify for. And I really don't encourage the average consumer to get too much into the weeds of the very small details associated to conventional loans, to VA loans, or FHA loans. But I will be glad to go ahead and share some high-level information because it does matter and it can help you. A conventional loan, this is something where it's going to be sold to Fannie or Freddie, and it is commonly known as like a conforming type of loan. And that will have down payments as low as 3% or 5%. Then there are government-backed loans. That would be your VA loan, your USDA loans. And your VA loan, those are, again, for your veterans. And they have benefits associated to where there's down payments. They're not required. They allow for loan to values up to 100%. Your FHA loans on that, it's also a government-backed program. And with that being said, they allow for down payments of 3.5%.
So it sounds like there's different loan types for different people that cater to almost everyone's needs.
Yes.
Okay. So once, and who's going to help me know what type of loan is going to be best for me?
Your mortgage loan officer will be able to help you with that, and they'll be able to give you a few product offerings and be able to help you identify the best program for you.
Okay. Well, are there any things during this period that we as home buyers should avoid?
Yeah, when you are in the midst of purchasing a home, I definitely recommend avoiding any type of large purchases, things that will go on your credit report. Now is not the time to be also buying a new car.
Okay.
Or using your credit cards to buy things because you are wanting to make sure that whatever your credit was, your credit profile was when we got you pre-approved, that is being maintained. So that way, when we do get to closing, there won't be any hiccups along the way.
Gotcha. So don't take that loan for that Labubu out before I buy the house.
Yeah.
I got it.
No,
Okay.
no.
No Labubus, huh?
No Labubus.
Maybe that's my closing gift to myself.
There you go.
Okay. So wow, there's a lot of moving parts,
Yep.
moving pieces. Sounds like a lot of documentation needs to be given back and forth.
Mhm.
What type of, so that's actually a really good question. What documents do I need to have prepared?
Yeah. So the good news is you as a consumer, you don't have to remember. We will prompt it from you. But as a good rule of thumb, we will ask for income documentation. Depending on if you're self-employed, we will ask for 2 years worth of tax returns. If you're a traditional wage earner, we would ask for pay stubs and W-2s. From there, we also ask for bank statements because, for instance, we've just talked about the need for down payments. We need to verify that the funds are in the account. We also ask for things associated with um, if there's anything on your credit report that maybe needs an explanation for example, maybe there was a slow pay, we might get a letter of explanation trying to understand what happened there.
So a little bit of explanation on my finances,
Mhm.
things like that. Well, okay. So, is it a bad thing if my family members help me with the down payment?
No, it's not a bad thing if your family members help you with the down payment. We also just need to make sure that the program that we're trying to fit you in qualifies for it. And that's what's known as a gift. And having a gift for a down payment is okay. We just got to make sure that, again, the program that you're looking to partner with and get put in allows for it. And sometimes there might be thresholds associated with it. Maybe it's a 3% gift tolerance. Maybe there might be a 5%. Each program varies. But in the event, if you're going to be gifted funds, um, we'll go ahead and give you some feedback on the best way of exchanging funds for that. But yes, it is definitely allowed.
Well, I know that when I was buying my home, they were telling me that there was well, then they asked us if anyone was helping us with the down payment.
Yeah.
And they said, because when we're looking at your income and your bank statements, we want to make sure we don't consider that. Like they told us if my parents or someone was going to help me to not have that money hit my bank account like a month before closing.
Yeah, so if funds are commingled, it can get complicated. And the reason why we want to avoid the commingling of gift funds is we then have to get bank statements from the gift donor. And a lot of times the donors don't want
I
to share
see.
their bank statements. And so, in order to avoid that, we suggest that if you are going to be getting a donor or a gift, you go ahead and wait. And when the time comes for closing, we go ahead and get it sent to the title company directly.
That's actually a good suggestion. So just interact with the title company, have that money go there, and it doesn't matter if that money for down payment or closing comes out of your bank account. The title company just, hey, here's the money.
Exactly.
Okay, I got it. So what else do I need to consider? I mean, I've chosen my loan. I'm picked the house. When do I get my keys?
Oh, okay. So you have entered contract. You are in the midst of the contract period, which takes about 30 days, and we're wrapping up. You've gotten your conditional approval. Once you've gotten your conditional approval, we're moving in, getting conditions cleared up, and we get to clear to close. Clear to
I hear
close.
that a
We
lot.
get the clear to close, which means we have the green light to go to our title closing company and we get to sit down and sign the official documents that allows you to transfer home ownership into your name, which is super exciting. But then also you're going to be signing documents associated with the loan that's going to be placed on it. And so when that happens, that takes about an hour. You're going to attend, the seller's also going to attend. And depending on the transaction, sometimes you're able to get keys right away.
Okay.
However, if funds need to be exchanged after the fact, or sometimes the sellers or even the buyers, they can't attend the same closing, there might be a delay, but you should be able to get your keys for sure at the end of the day at closing.
Wow. And then I get to move in. Yeah, I get
Yes.
to move in. That's
Yes,
exciting.
that's exciting.
So that seems like a super long process. How quickly can I buy a home? How long does this process take me?
Well, if you get your pre approval and you go shopping, that can take anywhere from 30 to 90 days, just depending on if you find a home. But then from there, once you enter in a contract, that also takes about an additional, 30 days. And honestly, I can see things take about 120 days altogether. Now, of course, if you are finding a home right away and you go into contract extremely quickly and you're on it with getting documents and you can close relatively quickly. But as a whole, that's what I would say is 120 days from pre approval all the way to closing.
Wow. That's nice. What do I do during those 120 days?
During that, I would definitely say, one, again, avoid the large purchases. Stay in communication with your realtor, especially if you're home shopping, right? Also, stay in communication with your mortgage lender, especially before you've gone into contract, because one of the things you're probably going to be interested in knowing is where mortgage interest rates are. And so it's good to have a good check in on a weekly basis on seeing where the market's at. So that way you have, again, an informed decision, and it's also continuing to give you that peace to further your confidence building in your home purchase.
You mentioned something there about mortgage rates.
Yeah.
When is so we're talking 120 days.
Yep.
Obviously, mortgage rates can fluctuate quite a bit in
Yep.
those 120 days. I think, as a matter of fact, just the other day, the Fed reduced rates down a little bit. So
Yeah.
they fluctuate some.
Yes.
When does my rate get set? Does it get set at my pre-approval, or is it set on I guess, the day I close?
Yeah, good question. Just know that also mortgage interest rates are set with the bond market, um, not with by the Fed.
Okay.
But outside of that, going to your question of when can you lock your interest rate, that's when you go into contract.
Okay.
And so the whole time that you are shopping and you have your pre-approval letter, you have a floating interest rate. And that's why it's good to consistently check in with your lender and seeing where the market is. But once you go under contract, you will have the option to be able to go ahead and lock. Now, if you go into contract, you don't have to lock. That is a decision that you can choose. And so during the contract period, when your loan's in processing, you can choose to float your interest rate. But what will end up happening is before you get issued a clear to close, a lock will have to be issued then.
Okay. So do I have the choice to lock if I see interest rates looking really good? Can I go ahead and accelerate that locking of interest rates? Is there anything I can do to lock the interest rate at what I want and not have to worry about it fluctuating during these days?
Not if you're not under contract.
Okay. So
Yeah,
under contract is kind of that key
that's that
word
key point.
to get that set interest rate where I want it.
Correct.
Okay.
Correct.
Well, what are some of the things, Amber, that, after I buy my house, after I move in, I think there are things that maybe we don't think about. I think about when I bought my house, some of the things that surprised me was those costs associated after the fact. I had to
Yeah.
buy a lawnmower. So I rented a house. I'll be honest. I
Yeah,
rented a
yeah.
house, very small yard.
Sure.
I bought a house with 1.6 acres. I had a push mower.
Oof.
You can see where I'm going with this.
In Texas?
In Texas. It didn't take me long to get a riding lawnmower, but that was a cost that I had no clue I was going to be making.
Yep.
So, I think about things like that. I think about things like maintenance costs. We
Mhm.
don't think about when we live in an apartment or we rent a home. If something breaks, we make a simple phone call to a maintenance and they take care of it. Nowadays, when things break, it's handyman Chris who has to YouTube video to try to attempt to do it. Now, are there things that I can have as part of my home, like insurance, I guess, that can help me fix things that happen in my home?
They do offer home maintenance programs that are available, but Chris, I would go back to when we were talking about at the beginning of
Hmm.
buying a home, and we talked about how do you know if you're ready? That's a prime example of, in addition to making sure that you have saved up for your closing cost as well as your down payment. That's why you need to have money set aside for emergencies and home maintenance, because you're exactly correct. Once you purchase the home, there will be unexpected expenses that come up. And so, if you want to have confidence in this big investment that you're about to place, you need to make sure you have good savings. I actually think people underestimate moving costs.
Yes,
I
very
I
much
think
so.
that's I think the real thing that people forget. Are you moving yourself or are you paying for movers? That can actually add up quite a bit, but yes, you do have to have funds aside. In addition to once you get into your home, you want to make sure you get like your utilities turned on. Make sure you have like internet. For instance, if you're a rural area, maybe the city doesn't come and pick up trash, so you might have to get private party setups going. But you do have to think about that.
Well, what about any other fees? Like, so I know that it's not just my mortgage payment.
Mm,
What else is wrapped up in my mortgage payment though? Because
yeah.
my mortgage is relatively, I guess, inexpensive, if you will. I got my mortgage in 2020,
Okay.
so pretty low interest rates.
Yep.
But my home mortgage does go up every year. Why?
Yeah. Okay. Good question. So the mortgage payment is composed of a few things. There is the principal and interest piece, and this is the portion of your payment that goes back to the lender. And this is the fixed piece of your payment. So over the next, let's say 30 years, maybe that's the term that you chose, that's going to be your amount that won't change. From there, in your mortgage payment, the variable piece will be your homeowner's insurance, which we call hazard insurance. So that would be maybe through Texel Insurance. That is going to be also associated with your property taxes. These two parts of your payment vary because they do change every year. And so what happens is we escrow your payment. And a lot of people happen to ask, well, why is that escrowed? So a good rule of thumb is these two things, they're paid on an annual basis. And a lot of people struggle with paying that annual payment. And so the escrow option of paying it on a monthly basis makes it more swallowable and just easier to handle.
I see. I see. So I do have to think about a little bit more than just that mortgage
Yep.
payment in my budget.
Yep.
Okay. Well, what about, other than those type of expenses and things like that, you know, I am HOAs. I
Oh,
don't live in an HOA community. My parents do.
yeah.
So for folks out there, what is an HOA and just super high level, what are they there for and why do I pay fees to an HOA?
Yeah, I actually love an HOA. The first home that I bought was an HOA, and I chose to do that because the homes that were in my price range, I saw that the upkeep in the neighborhoods associated with the HOAs were better. And so an HOA is a community and organization, and there is a payment that is associated with it, but it helps upkeep the community. And so there's community standards that are in place. So, for instance, maybe there is a pool that is available to your community. And with that, you have the HOA dues to be able to pay for the upkeep of that pool. Maybe your area might have a gate and the HOA pays for that. Things just like on the outside landscaping, someone has to upkeep that in the HOA, they take care of it. The reason why I liked the HOA was I I don't I preferred neighborhoods where there wasn't a lot of like cars parked on the road. Someone didn't have like RVs out in the road. And so something in a community with an HOA that has rules in place that will help avoid things like that.
I
It's
see.
definitely not for everybody though, because some people they might want freedom and sometimes the HOA rules might restrict them. So you do need to be aware and understand what you personally like or dislike.
And I can find information about HOAs or the house that I'm looking at if they are associated with an HOA. I'm assuming my realtor will let
Your
me
realtor will
know.
let you know.
And they'll let me know kind of what I'm getting for those dues.
Exactly.
Are all HOA dues the same, or does it
No.
vary from I guess neighborhood community to neighborhood?
It really does. And it also depends on, for instance, like if it's a condo, or if it's just a home in a traditional HOA community. So I've seen HOA dues range for $200 annually, to where if it's a condo, maybe it's $200 a month. So, for instance, an HOA fee associated with a condo is traditionally higher, especially like in an urban setting, because maybe you're paying for services for fixing of an elevator, or maybe there's a doorman.
Property
Um,
upkeep,
Property upkeep.
landscaping.
Mhm.
Okay. So HOAs are really there to make sure that my community stays clean. My community stays
Within a certain
within a
standards
certain standard
that we all
that
agree to.
we agree to,
Hmm.
that we are comfortable living around. And there's others who say, "Hey, I just want to do my own thing and put up a pink barn in the back of my house with
More power to
14
you.
goats, no problem."
More power to you. Won't be in an HOA though, and that's okay. And that's where you probably live in the the country setting. Yeah.
So is there a difference between prices in urban housing and suburban housing?
Um, I think it's just on the marketability, on if it's in an area that is selling, that sets the price. Um, so I don't necessarily would say that maybe in the country setting it has a higher price versus the city, because when you're outside of city limits, you generally have more land, and so sometimes the prices could be higher because of that.
Let's see. I think about, the my 1.6 acres
Hmm.
versus a neighborhood home. I mean, I am set in a neighborhood,
Yeah.
but all of the plots were acre and 2 acre plots.
Yep.
And so the home prices there are a little bit lower than some of the new builds. But I'm also not getting amenities of a new build too. So can you kind of talk to us about that as well? Buying a home built in the 2000s versus a home built now 25 years later.
I would say the newer builds, when I see contracts and homes that come through, I've seen smarter tech compliance or tech packages that the new builds offer. Things like security systems are already programmed into the home, while maybe older homes didn't have them. The newer ones actually have them custom built in. But yeah, that would be more of
Okay.
a realtor question.
So a lot of give and take when looking for homes. So I know we've gone for almost an hour, Amber, and we've given our listeners a lot of
A
information,
lot. Yeah.
probably a lot more than
Yeah.
they were expecting.
For sure.
So if we could take 5 seconds and condense everything down into some words of encouragement for first time home buyers, what would it be?
I would say don't allow the news to influence when you're ready to buy a home. Allow that to be just your strategy. And so you need to educate yourself to find the confidence, know what you can afford through your budget, and then from there, jump into home ownership at that time. Don't allow, oh, rates are lower, rates are higher to influence you. Again, just use that as a strategy.
Okay. And so I guess for me, it would just be to stay calm. There's a lot of information and a lot of things that you're going to have to do to buy a home. You're
Hmm.
going to have to remember how to save, how much to save, what to look for in a home, where to look for that home. You know, get those tips for house hunting from your friends. Don't forget about those expenses, but ultimately stay calm. There will be people to guide you along this process. Just feel comfortable, feel safe, and go for it. Home ownership is, like you said, it's a blessing. I absolutely love my home, and I cannot imagine not living in a home that I've purchased.
Yeah.
The 20 years from now, I think when I go to leave that home, I think I'm going to leave that home in a much better place than I did going into that home. And that I think is another big thing about home ownership is you're actually buying an asset,
Mhm.
something that's going to and should appreciate as long as you take care of that home. If you give maintenance to that home will appreciate and you'll be left in a better spot than you were before. So, Amber, do you have any final words of wisdom for our listeners?
I would say that um, a lot of times people are choosing not to buy because of interest rates. And so we do homeowners education and we do a 30-year look at historical rates. And if we were to go back to the 70s, we would see where rates were right around the same place that we are, and rates skyrocketed up to around 18%. And a lot of people were choosing not to buy at the time because they were like, oh, I'm going to wait until, rates drop. Well, if they chose to do that, they'd be on the sidelines for 10 years. So again, I just go back to you buy when you're ready based off of your budget and also when you have the confidence and education to do so. Don't allow what's going on in interest rates and housing market to impact you. Use that as your strategy.
All right. Well, Amber, it was a pleasure today
Yeah.
talking to you about home loans. I really enjoyed it. I think there's a lot of information that our listeners can take from this. We're always happy to help home and new home buyers. So I don't know if you want to plug any information to our listeners to where they can contact us for any of their inquiries.
Yeah. We actually have a few avenues if you're interested to learn more about the Textile Home Loan Team and just the products that we have. Online, you can find our online loan application. You can also go into our local branch where we have mortgage loan officers available to also speak with you.
All right. And thank you everyone for joining us for Worth a Listen. I hope this was worth your time.